With mortgage rates dipping below 6% for the first time in over 2 years, you might expect a surge in the housing market, right? Instead, we're seeing something very different. What's really going on in Orange County's real estate market this fall? Well, today we'll break down the data, uncover why home buying demand isn't skyrocketing, and explain how this affects you as a potential home seller in Irvine and surrounding OC areas. I'm Monica Carr, and this is your housing market update for the fall of 2024. Before we dive in, make sure you subscribe to our channel for weekly insights on the Orange County housing market. Whether you're selling or just curious, staying informed is key. Now let's dive in. This fall, we're seeing a notable shift in Orange County's market. Active listings have increased slightly by just 1% in the past couple of weeks, bringing us to 3,694 homes on the market, a whopping 53% increase from this time last year when we had only 2,408 homes available. With more competition, sellers need to be strategic about pricing. In fact, 34% of homes currently on the market have already reduced their prices, and 21% more homes have been pulled off the market compared to last year because they were overpriced and couldn't attract buyers. Meanwhile, demand has increased slightly with 1,598 pending sales, which is up 3% from the previous 2 weeks. But it's not the frenzied market we saw earlier this year, and market time is now at 69 days compared to just 54 days last year. Now, let's zoom in on Irvine. Back in the summer, Irvine's real estate market was incredibly fast-paced. The median sales price was $1,524,000, and homes were flying off the market in just 8 days, with 231 active listings on the market. Fast forward to today, and we're seeing a slight shift. The median sales price in Irvine has increased to $1,550,000, a sign that home values are still holding strong. However, active listings have surged from 231 to 449 homes, meaning buyers have nearly double the options they had just a few months ago. The median days on market has also jumped to 16 days, indicating that homes are still selling near the same rate as the countywide average of 14, but the market is cooling off a bit compared to the summer frenzy. So what's causing all this? Well, one of the biggest factors influencing today's market is mortgage rates. In recent weeks, we've seen rates dip below 6%, which many experts predicted would lead to a spike in home buying activity. But that hasn't happened. Why not? According to Mark Palin, the chief economist at Fannie Mae, many homeowners are experiencing what's called the lock-in effect. They're locked into ultra-low mortgage rates, sometimes below 3% that they secured during the COVID-19 pandemic, and they're hesitant to give that up. Even if they've outgrown their home or want to move, the idea of trading that low rate for today's 6% rate keeps them sitting tight. When we look at this chart from Investopedia on the last 90 days, average 30-year mortgages are climbing back up slightly from a low in mid-September, which may look bad for those waiting for the best rate to make a move. However, when we zoom out and look at where rates have been since June 2021, things start to look more positive. October of last year was the highest point in rates since the year 2000. Since then, we've been moving down gradually, currently around 6.3%. However, if you are experiencing the lock-in effect due to your low current rate, you'll be happy to know the economists are predicting even more federal rate cuts in the fall and into 2025. So what does all this mean if you're thinking about selling your home? Well, first, it's more important than ever to price your home correctly. As I mentioned earlier, 34% of current listings in Orange County have already reduced their asking prices at least one time. Overpricing your home can leave it sitting on the market, especially with the increasing competition and longer market times. But here's the good news. Despite these market dynamics, our team has helped sellers not only sell faster, but also for way more than they expected. For example, our recent clients at 51 Royal Pine were looking at a Zestimate and Redfin estimate of about $3.8 million before we launched the home on the market. And after we implemented our proven system, they walked away with $4.5 million. That's a difference of $700,000, and it only took us 10 days to get their home sold. Strategic pricing and expert marketing are key in this market, and we know how to price your home to leverage the demand in your neighborhood. And if you're a potential buyer currently sitting on the sidelines due to that lock-in effect, here's something to consider. If the only thing you currently love about your house is the mortgage rate, we need to talk about your options. Holding on to a low rate might feel like the best decision, but is it truly serving your current lifestyle? Whether you've outgrown your space, want a better location, or need more modern features, now could still be the right time to make a move. While today's rates may be higher than what you locked in during the pandemic, they are currently on a downward trend, and our preferred lender, Ryan Perpero at US Bank, has some of the most competitive mortgage rates in the business. We'd love to connect you with him to discuss your options. The point is, don't let a good mortgage rate be the only thing keeping you from your dream home. If you're curious about what's happening in your specific neighborhood or considering selling your home, now is the time to have a conversation with an expert. Reach out to me and our team at the Monica Carr Real Estate Group. We'd love to help you make the most of this market, whether you're ready to list or just exploring your options. Thanks for watching. Be sure to hit the like button and share this video with anyone thinking of selling in Orange County. And don't forget to subscribe for more updates, and I'll see you next time with the latest on Orange County real estate.